Good morning, everybody. Thanks for coming to the show, this time at a different hour, only today. It's Wednesday, November 18th. I'm Yohay, Elam, a Forex Crunch and Market Movers podcast, doing the show for FX Street. As usual, I see lots of people in the room, in the chat. Anyway, we're going to cover recent developments in markets, charts and levels. The next 24 hours, we have the main event of the week. And of course, answer your questions. If you can't see the chat box under the video, just please go to https tlk.io/fxstreet-forex-live-video. Good morning, Tilen. Yeah. Okay, so thanks for your comments. Anyway, let's begin with what we had yesterday in markets. Yesterday we had UK inflation just after the show. It came out, headline came out at minus 0.1 as expected. We had a small bump up from core inflation, 1.1%, and that sort of gave a small boost to pound dollar. It helped move 20, 30 pips higher in the immediate aftermath. It wasn't huge, but as I said yesterday, it was the second most important component of this release. In the Eurozone, we had ZU, the German Economic Sentiment Index, surprising to the upside. It rose to 10.4%. Basically escaping from almost negative ground. Good morning, everybody. But this didn't help the euro too much. The main event yesterday was US inflation. Core inflation came out at 1.9%, exactly as expected. Almost all the indicators came out as expected. We had a small positive surprise from headline inflation year over year, plus 0.2. All in all, what we talked about yesterday and in general, the US dollar is strong. It needs figures to come out as expected, nothing crazy. That was sort of good enough. Later, we had industrial output falling 0.2%. That was a slight disappointment, but it's not as important as the inflation figures. Okay, so that kept the US dollar bid. Things changed a bit this morning, especially with euro dollar. We'll talk about that soon. Just complete with the coverage of what happened yesterday. The New Zealand, the milk prices, once again, the GDT, the global dairy trade price index, milk prices, dairy prices, New Zealand fell for the third consecutive time, even worse than last time, 7.9%. That, of course, isn't good for the kiwi. And during the night, we had Australian wages rise 0.6% quarter over quarter, exactly as expected. So let's take a look at the charts. First of all, euro dollar, it extended its falls yesterday. It reached a low, sort of bottomed out. Maybe we'll add the line here at 106.30. Okay, so ranges are quite narrow. It's a bit frustrating. Anyway, this is the level we had. Much more significant support is at 105.30, 100 pips below this line. And since, because that was a line back in April. But after reaching 106.30, the lowest level since April, 7-month low, we had it stabilize just a bit. Okay, we had it sort of try again and again during the hours of the Asian session to tackle this line. And since then, it went up. Okay. Now we're at 106.70, erasing the previous support line of 106.60. I still see it as kind of a dead cat bounce, okay? Even though we're a bit higher than this low right here, seen last week. Anyway, further resistance 107.05, 107.80 if we have a real bounce. To the downside 106.30. And let me show you that 105.30 on the daily chart. That shows it much better. Yeah, it's right here, 105.30, the low seen back in mid-April, just 7 months ago. And this is, of course, the all-important support line at 104.60. Okay, so all in all, the euro continues to grind lower, but we're seeing some kind of correction this morning. News this morning from the Eurozone, and nothing regarding economic indicators. We had ECB member Yves Mersch saying that it's still early to understand the impact of the Paris attacks on the Eurozone economies. That's a bit different from what we heard yesterday from Peter Pratt from the ECB, but these are sort of minor comments. Of course, if you open the news, the economy is not in the focus. The focus is on the ramifications of the Paris attacks on Friday, the manhunt that was just this morning in Paris with the gunfire and a few dead, the scare yesterday in Germany around the football match, Germany against Holland, if I'm not mistaken. So this security issues take over economic news at the moment. Anyway, this is where we are, 106.70. I have a comment here from Jax, like this hour better. I'm from the United States and went to daylight time. Yeah. Okay, we'll take that into consideration. We'll check out the other participation as well. Regarding the time, we had this time before the change of the clocks in October, late October. Now, let's see if this works out better for you. I'll examine this with Mauricio. Anyway, back to the news, back to the show. This is what we had yesterday. And let's look at what we have. Let's talk about pound dollar. So pound dollar yesterday, we had it rise. It's rising also against the US dollar. So it's not, I don't think it's related to this weakness of the US dollar. It's just some kind of profit taking, not related to anything in the news. We're seeing now pound dollar attack the next resistance line at 152.50. Yesterday we had it bounce from the lows thanks to stronger than expected inflation numbers in the UK from 150 to 152 and then grinding higher. If we see a break of this level, next resistance 153 and then 153.70. Support 152, 151.50 and 151.10. Okay, dollar yen maintaining the higher ground, still a bit shy of that 123.60 level, currently at 123.30. It already reached the highs of 123.50. It's waiting for the big event of the day. Dollar CAD, it went higher yesterday, but remains a safe distance from 132.80, which is support. High resistance 134.60, which is the 11-year high. Aussie dollar yesterday received good news from the RBA regarding that the RBA is relatively bullish on the Australian economy. We see it trading quite a nice range here. Okay, currently 71.10, 71.05, trading within this wide range of 70.65, which is a clear separator of ranges. Support here, resistance here, and 71.60. Quite nice range trading. And the New Zealand dollar also trading in a more narrow range between 64.50 and 65. So we have both the Aussie and the Kiwi performing nice range trading. Okay, let's look at what we have today on the agenda. So we have today on the agenda, we don't have important events during the European session. The big things begin at 1 when we have FOMC member Bill Dudley speaking. He's a member, he's number 3 in the Fed. That's Yellen is of course first, then Stanley Fischer, the vice chair, and then Bill Dudley of the New York Fed. He speaks at 1, let's say, 1 GMT, let's say if he talks about monetary policy. At 1:30 we have housing data from the United States, building permits and housing starts. Let's look at what's expected on the economic calendar. This is the calendar, the FX rate calendar on Forex Crunch. We have it right here. So building permits are expected to rise just a bit from 1.105 to 115. Trend is generally higher, but it's quite choppy. And housing starts are expected to they're expected to fall from 122 to 116. All in all, it's more if both figures go in the same direction, of course it's good news for the US dollar. If both of them go if both of them go in the same direction, which is up, then it's good news for the US dollar. If both go in the same direction and it's down, it's bad news for the US dollar. But in many occasions, they just come out mixed, okay? So one figure is surprised to the upside and the other to the downside. Okay, anyway, it's a bit These figures are a bit overshadowed by the main event of the day and of the week. Actually, the Fed meeting minutes at 7 GMT. We'll hear more details about what the Fed said, what the Fed decided back on October 28th. Okay, so let's talk a bit about that more in detail. On October 28th, the Fed had a rate decision that did not include a press conference nor new forecasts. Okay, the Fed decided, of course, to leave rates unchanged. It decided two more important things. First of all, it had in September reference to international developments, worries about basically China, stronger dollar, sort of giving downside risks and things like that. In October, they had a small reference, but it was very muted, okay? So we had less worries from the Fed on international developments. That's the first hawkish development. The second one is the wording regarding the timing of the rate hikes, okay? So we had in October, they said that when considering the rate decision, the rate moves in the next meeting, they will consider a long number of factors. The mere fact that they decided to mention the next meeting was, of course, a bullish sign. Okay, so this, I think they sort of gave a hint to the markets that December is certainly on the cards. We had a strong reaction from the US dollar then. That was October 28th. On November 6th, a week and a half later, we had the decision, we had the non-farm payrolls number, which came out much better than expected, 271,000 jobs gained, and wages rose 2.5%. Both things together create high expectations for today. Okay, now we did see the implied probability of the bond markets, what they see in December, slide from 67 to 70% down to 64%. And the new bond king, Bill Gundlach, said that this is about right, okay? But in general, markets are expecting a December rate hike more than not, okay? So I think expectations are a bit high. So if we get really bullish stuff once again, another hint from the Fed minutes that they're about to raise rates in December, and that's certainly possible because of the strong NFP and inflation that was okay, then I believe we'll have another leg higher in the US dollar across the board. But if we have something that is not news, given the high expectations, I believe we could see some kind of profit taking, because when expectations are sky high and reality is just okay, then we could have the dollar falling a bit more to reality, a bit more data dependent, a bit more speculation. Of course, if the Fed goes totally dovish, which is a very remote, unlikely chance, then of course we could see a fall of the US dollar. I'm not sure, I don't see that scenario. I'm not sure if we'll see another hawkish Fed, another rise in the US dollar, or just an okay one and some kind of profit taking. So these are my two main scenarios. I don't have a preferred one at this moment. I believe the Fed will hike in December, but perhaps it'll not sort of put the seal on it. Now, you may say, okay, the Fed minutes are from October, so it's a bit old, and we're already 3 weeks after this, and it doesn't relate to the non-farm payroll. So if it's only an okay report, then after the NFP, it's, of course, they think in a more bullish way. But let me remind you that the Fed minutes relate to that meeting, yeah, what members officially, in theory, said that meeting, but these minutes are revised until the last moment, until this week. Maybe not today, maybe they were already finalized yesterday, but remember, it's a document. The Fed knows that this document is closely watched by markets, so they revise it until the last moment, okay? So I believe that we'll have sort of the document adapted to recent developments. Anyway, it's a very boring document, but it doesn't mean markets won't react. So we'll see a first reaction at 7 GMT, then at the Tokyo session, and the full reaction in the European session. We'll be here, of course, tomorrow to digest everything that they said and everything that markets said afterwards. One important analyst to watch is John Hilsenrath at the Wall Street Journal. He always has this quick analysis, and he has a lot of influence. He's not the only one. Analysts or traders are independent as well. They read the minutes, but he has sort of this kind of immediate influence that could wane off later on. Okay, so that was a sort of a long preview of the Fed minutes. Afterwards, let's go back to the charts. Let's see, I think you have some questions. So we have the New Zealand PPI at 9:45 GMT. For those of you trading the kiwi, it could have a minor impact. And during the night, a rate decision in Japan. We have in Japan, we had news this week of that Japan is officially once again in a recession. Okay, so it's bad news for Japan, but not totally unexpected. It was a bit worse than expected. Let's see if they react to that. No action is expected from the Bank of Japan, but they might give us a hint that they are ready to act or not. I believe that the Bank of Japan missed their big opportunity to act in late October, and because they perhaps see some signs of inflation rising according to some indicators. Anyway, I believe they'll leave it to the Japanese government. But I believe it will turn out to a non-event. If they do hint of action next time, I believe we won't have something this time. Then, of course, we might have a weaker yen, and 123.60 could be challenged. Okay, we have here some questions from Pan. Good morning. Fed minutes are from the last meeting, so would you expect them to be bullish for the USD? I believe they'll be bullish, not only because the meeting itself back in October was they released hawkish signs, as I mentioned, but because they are, but because we had the strong NFP and the okay inflation numbers yesterday, and the not too horrible retail sales numbers on Friday. Now, of course, they might take a different view, sort of micromanage market expectations. The decision is on December 16th. We may see more data. It could be better. It could be worse. We have one more non-farm payrolls report, of course, on December 4th. In general, the first week of December is really exciting for euro-dollar. Maybe they'll manage expectations, but I expect them to be bullish. The big question for me is, will they be bullish enough after that October meeting and the NFP, or just within expectations, and that could be sort of an opportunity for profit taking, and I'm not really sure which is. I don't have a clear scenario on that. Okay, any more questions? In the meantime, let's talk about other events this week. Let's do a small recap. We had Japanese GDP on Monday. As I said, they showed Japan is in recession. Draghi spoke on Monday, but I couldn't find his comments anywhere. That was a bit frustrating, I must say. So that was Monday. He'll speak again on Friday. Yesterday, we had inflation data in the UK, which was marginally better than expected. US inflation data also marginally better than expected, was okay. New Zealand milk prices disappointed. Today, we have the Fed meeting minutes. Tomorrow, as I mentioned, Japanese rate decision. And on Friday, Draghi talks once again. Let's look again at euro-dollar. And, well, it's continuing. It's extending its gains. Okay, so since those lows of 106.30, we're already 50 pips higher at 106.80. And I can't. Why the London market open rally in euro-dollar? I see it as not only the euro, I see it also, look at the pound here. Also, the pound is gaining some ground against the US dollar. Other currencies, not so much. Okay, so I can't put my finger on one specific reason. I see it just as profit taking. I wouldn't call this a rally. I would call it correction within the range. Let me see if I can find some breaking news, because we don't have any kind of economic release now, but sometimes we have ECB comments that are unexpected or things like that. No, the only thing I can point to in the context of the euro is the comments that I mentioned before from Yves Mersch of the ECB, that he sees no economic pessimism after those terrible attacks in Paris, which is contrary to what his colleague Peter Pratt said yesterday, that there are downside risks from these attacks. Of course, there are security costs and things like that. But it's not such a big deal because the ECB is expected to add more monetary stimulus, was expected to do that regardless of those attacks before those bad news broke out on Friday. So I don't see it as having such a big impact. Of course, I see it as having an impact by drawing attention away from regular news to this manhunt this morning in northern Paris, in news yesterday from Germany about this suspicion of a car bomb, in general airstrikes by France in Syria. So it's taking a lot of media attention. Of course, it has some economic impacts, but less so on the ECB. Okay. Tillen said we had news from BOE's Broadbent. Yeah, he's a member of the Bank of England, and he said that he sees a problem with focusing on the actual date for an interest rate liftoff. So this is sort of general commentary, and the reaction in the pound is not so strong. So I didn't mention that, and thanks for mentioning that. Let's see if I can pick up some more comments. He said that shocks can lengthen the time to return to CPI on target. And positive shocks can shorten that time. That's what I think. So anything is possible. It's not really something. I don't see anything new in his comments that would move the pound higher. Yesterday we had core inflation a bit better than expected, and that was positive. So that's everything I see regarding Broadbent's commentary. Any more questions? Yeah, question from Jack Sarwald. Think they know there will be no hike in December? You're talking about the Fed, I assume. I believe they will hike in December because they want to prevent bubbles. They don't want to have a legacy of bubbles. And they prepared markets so much that if they back off, I think they're a bit trapped in their own words as well. Okay, the Fed. And in addition, we do see some kind of signs of inflation. Okay, now this is referred to an article I read today, and let's see if it's real or not. But analysts say that if you look at manufacturing, you see downside pressures on inflation. But if you look at services, we see some upside pressures. If you take services ex shelter, whatever that means, I'll have more news maybe tomorrow about that for you. We have 3% year-over-year inflation. Okay, so of course there are so many measures of core inflation, excluding autos, excluding gas, and excluding food. So it's looking at so many factors makes things a bit complicated. But the Fed does look at core inflation, and it's different from the Bank of England or the ECB. So you can see some signs of inflation rising. It's very hard to see them, I know. But Fed Chair Yellen said they don't need to wait to see inflation in order to raise rates. Other members did say that they want to see inflation rising. What we do know is for sure is that in October, wages rose more than expected, 2.5% year over year. Okay, the range was 1.9 to 2.3, and now they rose 2.5. Now that can be a one-off. Okay, so all the things I said now, services sector, inflation, rise in wages, but only one-off at the moment, one time. What else? Other measures of core inflation. All these are very, very small and tentative signs of rising inflation that could also make the Fed act. And of course, employment, the other Fed mandate, is gradually improving. So this should be good enough, in my opinion, for a rate hike. But these are, of course, we're not seeing inflation getting out of hand. We're not seeing it picking up, gaining steam, any other kind of metaphor you wish. It's more, we're seeing if you wish, green sprouts of inflation. Okay, so that's why I believe we will have a hike, but of course it's data dependent. The most important release is December 4th, the non-farm payrolls, but we have other important figures, housing figures today, and of course what the Fed thinks about things. Okay, another question from Fabian. Today there isn't any market moving news until the Fed minutes at 9. It's 7 GMT actually. Given that euro dollar is quite overextended, how do you expect it to behave until the Fed? Can it still fall going into the Fed? Let's look. Well, currently we're seeing an extension of this move, as you said. So we're already at 106.85. I believe that we won't see any big move. I don't think we'll tackle this 107.05, maybe rise a bit above, but not reach, let's say, 107.80, which was another high over there. Yeah, we do have the building permits and housing starts, but first of all, it's not as important, for instance, as retail sales or inflation. Secondly, with the Fed, it could limit any moves. So yeah, maybe the move in I agree with you. The move in euro dollar perhaps was overextended, and that's why we're seeing some kind of profit taking. I don't think it's a change of course. I don't see a reason for that, and I think the next move in euro dollar could be both ways, and it depends on the Fed. As I said, okay figures from the Fed, and 7 GMT. So if we have sort of Fed on track to raise rates, we could see some profit taking. If we see them a bit even more bullish, giving us a thicker hint of a rate hike in December, then we could see an extension to the downside. Let me refresh this. This was from yesterday, almost 69% chance. Now we have 64%. Okay, so perhaps the implied probability in bond markets is also weighing on the dollar, but it's important to note that the move that we see now in the weakness of the dollar is more expressed in euro dollar, and here in pound dollar. Well, let's see if it refreshes, and less so in other currencies. So we would expect, if there's ongoing trouble in the world, for instance, dollar yen to weaken. So not much going on there. Okay, we can add maybe a support line right here on dollar yen, but this is the first currency that strengthens in trouble, so it's not really terror-related events are sort of more moving, more drawing attention away from markets and not having an impact. Dollar CAD is falling just a bit. We're seeing at 133, still within range. Let's look at oil prices. We've seen some kind of recovery, yeah, but still in this range, 41.23. So we bounced off 40, but still 42.50 is strong resistance. It has been here support, now it turns into resistance. Okay, this is WTI crude oil. An interesting development we had yesterday did not happen in currencies, but in precious metals, and gold prices fell. Oh, sorry, that's not the right one. Gold prices fell to their lowest level in over 5 years. Okay, still battling this 1071 level, but we fell under this level before yesterday. So let's look at maybe the weekly chart. This is the price of gold, fell below the lows seen here in August, and now it's trading at the lowest levels since 2010, January 2010, perhaps a bit afterwards. Anyway, this is an interesting development. All this huge rally in the price of gold, especially in 2010, but also afterwards, and it remained on high ground and then began the gradual fall. All this speculation is gone. We're back to lower levels. I don't know how far gold can fall from here, because there is some real demand as well. Okay, there is also demand from industry and jewelry and things like that. So it's not only that. Yesterday we had a question about silver. So silver on the weekly chart is more of the same, also struggling on low ground. Still not at a 5-year low because we had this low here in November 2014, or like a sort of temporary low. Anyway, and we had this low here in August. So this was an interesting development. Also, copper is falling, and that's already pure industrial metal, not so speculative. Copper is considered doctor copper because it has sort of prophecy rights on the economy, but it's not always the case because not everything is manufacturing. There's a lot of services, including in China. There's a transition to services. So that's what's going on there. More questions? More charts, perhaps? Let's talk about other charts according to the order we usually do. So dollar Swiss, a pair. I don't really like Swiss crosses because the Swiss franc is manipulated by the Swiss National Bank anyway, but we did have a break higher because of the lower euro. 101.30 is the current level. 101.70 is resistance, is the new high we reached. The parity line is still support, strong support, but we have support also at I would say right here, 101 more or less. Okay, Euro Swiss is where they intervene more. So we had it bounce off support at 107.60, 108.10, 108.40 is the next resistance line. Anyway, it's important to remember they are keeping this cross bid. Euro pound, yesterday we had a dip, and also earlier today, dip below 70. Monetary policy divergence. The ECB is about to introduce more monetary stimulus. The Bank of England is set to raise rates at some point. So I remain bearish bias on this cross. Let's see if we can have it. No. I'll show you the double bottom we had here on this pair. So we broke under support here at 70.20. Still struggling with this specific line. Further support is at, no, it's not a double bottom, but it's still of importance. Yeah, right here. Next line is 69.40. Okay, the line to watch in euro pound. Euro yen. The yen is more stable. The euro is suffering a bit more, so we had it dip to lower levels below 131.50. Currently, it's bouncing back. The struggle continues, but let's look at lower lines, assuming a weaker euro on the longer run. Well, really strong support is right here at 126, but perhaps more support is it's a bit messy right here, right? Anyway, pound yen, mentioned it's going up. It's getting very close to this resistance line, the high we've seen back in September, 188.10. This is important resistance. We're currently at 187.80, so it's getting closer. Let's see if we have a bounce or a break. In general, if the US Federal Reserve raises rates, the Bank of England is next to do so, and we have, but currently the next, of course, after the 50 minutes, the big event for pound yen is the decision in Japan about the rates. Let's see if they do anything. We have a question from Fabian. Fed minutes don't have numbers to compare to previous figures in order to have an immediate feeling on the effect of on market participants. How do you gauge them once they are published? Does the price spike it or it reacts slowly? Excellent question. We have, of course, it's always more complicated when we have verbal stuff and not numbers. Okay, so what happens is that news agencies such as Bloomberg and Reuters have the data beforehand, and they already compile the headlines. So at 7 GMT, it's not that everybody reads the document from start to finish it and tries to understand what's going on. No, they already shoot out the headlines and they decide what headlines are important, but they don't always make the right calls on what's important and what's not. So first of all, we have the headlines, the algos digesting these headlines. They try to understand, of course, the reporters before the algos, what's going on about a rate hike in December. But then markets begin reading it and trying to understand. Sometimes we have the move in the wrong direction. We might see the dollar falling and then rising, or rising and then falling. After half an hour or so, we already have, or an hour, we already have analysts, like I mentioned, John Hilsenrath of the Wall Street Journal, maybe Steve Beckner of MNI, and other, and of course, you can read my analysis on Forex Crunch and great analysts on FX Street. Try to understand what they really said, what the market reaction is, but it's still not the final reaction, because market liquidity, when it's only the US session, is relatively thin, because London is already closed. Tokyo is still closed, it's still too early. Once we have Tokyo jumping in, we have the second reaction, but the most important reaction is giving it a full, let's say, 12 hours, 13 hours. We have time to digest it. We have two reactions from the United States, from Tokyo, and then we have the full reaction in the European session. Okay, so, but I believe that after half an hour, we should already understand what the direction is. The Fed, in many cases, tries to not to rock the boat too much, try to give some sort of subtle guidance and not give us thick hints of yes or no. But the words are scrutinized, and you can see already a real market reaction after a half an hour or an hour. Okay. Yeah, the price spikes immediately, to answer your question, but not necessarily in the right direction. So I wouldn't, if you don't have a very, very clear bias, or in general, it's better to read the news, understand them, and then enter a trade if you think it's right to do so, and not bet on one direction, because the spikes can be a bit nasty, and then you could be stopped out just to see the currency pair go in the right direction, or I don't know, or just think you got the right direction and then it goes the other way around. So it's a bit messy. I would wait a few minutes, try to read the news, try to understand what's going on before acting. Okay. More questions? Let's look again at euro dollar. Wow, continuing its nice move to the upside. As I said, I cannot find any real significant headlines. It looks to me like more profit taking. Bounce, overextended. 106.92 is the high so far. Let's see how far we go. Any more questions? Yes. Could you please repeat the most influential voices to hear? Of course, after yours, read an FX rate. Well, thanks for the kind words. Most influential ones are, first of all, John Hilsenrath of the Wall Street Journal. Let me write his name, type right now. Complicated name, I know, but I spelled it correctly. Secondly, Steve Beckner. Let me get his name right. Steve Beckner of MNI. Okay. It's John with no H. Yeah, John E. Hilsenrath. You can see his articles here on the Wall Street Journal. Here, I'll put it on the... Why doesn't it load? Anyway. Hilsenrath is from the Wall Street Journal. Yeah. just put a link to his stuff right here on the chat. These are sort of the biggest influencers. Note that also we have sometimes comments from the old bond king, Bill Gross. He used to be with PIMCO. And good luck. What's his first name? I forgot now. Jeffrey Gundlach. He's considered sometimes the new bond king. Okay. So these are, but remember, the first reaction just comes from the decision of those at Bloomberg and Reuters which headlines to choose, and how the algos understand them. So that's why it's quite messy. It's not like we have non-farm payrolls expected at 180 and it comes out 270, and boom, it's positive, or they come out at worse than expected at 100 and boom, it's negative. So this is much more verbal, and contrary also to the rate decision, it's a much more, it's a much longer document, and it contains all kinds of wording such as few said this, several said that, many said this, others said that, and that makes things complicated. So I always have the hawkish members wanting to act and worried about inflation, rising inflation, and with the dovish members worried about deflation and the jobs are not rising strong enough. And as I said, they always try not to rock the boat too much. Okay. So that's what's going on over there. Okay, so I guess it's time to begin wrapping up. Before we wrap up, a question from Jack Sorwell, what pairs to watch today? Well, Euro-dollar, once again, I repeat Euro-dollar because we're all this monetary policy divergence, and of course there is this rise that we're seeing now on the screen on Euro-dollar. And another pair to watch is dollar-yen, of course much later today, because of the Fed minutes, often dollar-yen reacts in a better manner than Euro-dollar or other pairs to US events, and because of the rate decision in Japan. So these are the two pairs I'm watching. In general, we have some correction in the dollar strength, more so against the euro and the dollar, and the pound, sorry, and that's why focusing on dollar crosses, dollar pairs. Okay. So this is the wrap up for the live market open, Wednesday, November 18th. We have some kind of correction in markets. Euro dollar rising 106.84 after finding a base low at 106.30, resistance 107.05, 107.80, support 106.30 and 105.30. Also some movements in pound dollar rising towards resistance 152.50. Above it we have 153, 153.70. On the downside 152, 151.50 and 151.10. What did we have yesterday that did strengthen the dollar contrary to other to this kind of small correction now? We had inflation coming out as expected, 1.9 in the core, and no surprises is good news for the US dollar. It's good enough. Industrial output fell by 0.2, but it was shrugged off by markets. Elsewhere, UK inflation dropped 0.1, but core rose 1.1, and that gave sort of more energy to cable. ZU in the Eurozone surprised the upside with 10.4%. No real impact on the euro. We're expecting EFO next week. New Zealand milk prices fell for the third consecutive time, 7.9%. That's why kiwi dollar is trading in a lower range. Let's see that. Kiwi dollar is trading in a nice range between 64.50 and 65. Aussie dollar, given the strong RBA minutes, in a range and not falling above the lows at 71.20 at the moment, between 70.65 and 71.60. What else do we have? Dollar yen, a stronger dollar pushes the yen. Here we have it on higher ground, a more narrow range. 123.60 is strong resistance. Dollar CAD, oil prices have stabilized but remain a bit low. 133 at the moment, 132.80 and 134.60 resistance. So these are the main pairs. What do we have today on the agenda? The top event of the week, Fed minutes at 7 GMT. Three scenarios. First of all, that they sort of repeat what they said, which is giving us more fuel, or the same fuel for rate hike in December, acknowledging improvement in employment, in inflation, not so worried about international developments, and still considering everything in data dependent. Given the high market expectations, this could be another opportunity for profit taking. That's one probable scenario. Another probable scenario is that they gave us an even thicker hint about action in December after the NFP. Remember, the document is revised, so we could see the dollar taking the next leg higher. Third scenario, not so probable, is that they take the other direction, unprobable because of the NFP, and that could, of course, weaken the US dollar more than just repeating what they said. Okay. Elsewhere, we have Dudley speaking at 1 GMT. He's number 3 at the Fed. He's been cautious, leaning just a bit to the dovish side. 130 building permits and housing starts. The figures need to strongly go in one direction in order to have an impact, because first of all, they can go in separate directions and leaving us confused, and secondly, because of the Fed minutes. And the crude oil inventories at 3:30 GMT, especially important for the Canadian dollar. This time, perhaps we could see, after many weeks of rises in inventories, this time we could perhaps see a drawdown and perhaps give some support to oil prices, but not too much. And we have New Zealand PPI at 9:45, and rate decision in Japan. It's the first rate decision after the news about a recession, which was not totally unexpected. No action is expected from the Bank of Japan, but they might relate to action in the future. Inflation targets, they might weigh on the Japanese yen, but they had a bigger opportunity in October, so I'm not sure they'll take any opportunity now. If they do act now, of course, it'll be a huge surprise and weaken the yen, but seems very unlikely to me. Okay, so that's the wrap up for today, main event Fed minutes. You see we have more questions. So from JM, if the Fed minutes are hawkish, where do you see your dollar dropping? So the levels I'm looking at your dollar, first of all, if we stay at the current highs, we can just draw back to range to 106.30. And the next level is 105.30, because that was support in April. And 104.60 was the lowest level in 12 years, and that's really strong support. But they need to be really hawkish in order to challenge those levels. Alexei says, sounds to me anyway, US going to hike while Japanese going more easing, so breaking the current resistance. I'm not so sure. Well, I am more convinced about US going to hike at the moment. Of course, data can go sour, things can get worse, and the NFP in this early December for November. But I have a relatively strong conviction that they will raise rates. Regarding the yen, I'm not sure that they'll ease. I'm actually leaning towards no easing, so I'm not sure it'll break resistance. Anyway, we have 125, which is strong resistance in dollar yen, above 123.60. There's still room on the upside for dollar yen, but perhaps not to new multi-year highs, okay? Perhaps the high, I think, was 125.88. Let's look at the chart. And I'm not sure we'll see that soon. Yeah, 125.83. So that's sort of strong resistance, and we'll probably need action from both central banks to challenge that. Okay. Another question from Bian. Let me try to read that out. About the starting time for webinars in following days, I'd kindly suggest that there would be no point in doing a Europe market open webinar starting 1 hour after market opened. It is really already uneasy keeping an eye on the chart while following Yohay starting 8 GMT. Oh, message removed. Okay. Okay. I see that coming out again. Let me read that at GMT. At the same moment when market opens, like today, that market made almost 50 pips at London Open for apparently no reason. Actually, it would be much better to start 1 hour before the market open so that the webinar finishes before, when market opens, at least half an hour before market, like 7:30 GMT, and follow together the market open. But at least please don't move the webinar when it would lose most of its interest, just my opinion. Well, thanks for your opinion, Fabian. In any case, we're always looking for feedback about anything. So you suggest starting it at 7:30 GMT, and then sort of just before the market opens, and then accompanying the market open at 8 GMT, if I understand correctly, right? Anyway, we have different opinions here. We'll check not only, of course, what you guys say and what we see in our statistics, and we'll reconsider it. Today it was just a one-off because I had to do some things in the morning, so it's certainly not the time. Tomorrow we're getting back to 8 GMT. Okay. So well, thank you very much, everybody, for the questions and the feedback, also about the time of the show and about everything. Let's see if we have more upside movements in euro-dollar today, or is this just a correction? Okay, so that's it for today. Thank you very much, everybody, for coming, for the excellent feedback, and see you tomorrow at 8 GMT, the normal hour. Okay, thank you, and great success today, and goodbye.